Hey, welcome back, YouTube Universe. We're in week 12 of our 52-week money challenge. 11 is behind us, and we're going to plan for 12 today. So let's go to the board, recap what happened in week 11, and let's plan for week 12. All right. For week 11, we had two plays going on at the same time. We had a covered call and a cash secure put. The covered call was on charge point. Charge point. And the cash secure put was on fuel cells. All right. For charge point, what we had was the strike price was $28.50. Expiration date, of course, was 19 March. That's on both of them. And we had two contracts. For fuel cells, we had a cash secure put, and that was for $15. Expiration date 19 March, one contract. All right. The total amount received for selling these cash secure puts and this covered call was, we received $191.96. That's what we received to open this up. All right. During the week, we spent a total of $84.02 to close out some of those positions. So we had a net profit for the week of $107.44, which equates to another win. All right. So that's going to put our record at, what was that, 11? Nope, 10-1. So for week number 12, all right, what we have for week number 12, we're going to do the plays. We're going to do definitely a poor man's covered call, a covered call, and those are primarily going to be the two. Now, the poor man's covered call is going to be on Apple. And the covered call is going to be on fuel cell. What happened with fuel cell? We had a strike price here of 15 bucks. It closed out at $14.97. So we ended up buying 100 shares of fuel cells at 15 bucks. So here we're going to turn around and do a covered call to generate some more premiums on this. All right, so with Apple, we're going to be looking at a strike price of about 130 bucks. I think it's currently at $119.99. That's how it closed on Friday. Expiration date for both of these is going to be, 26 March, this Friday. For the Apple, that's going to be one contract. For fuel cells, we're going to look at, we bought it at 15. We'll look at selling it also because we want to try to up our premiums for 15 also. We're going to break even there, but we're going to generate some income. And we're looking at one contract. I'm expecting from both of these to receive at least 130 bucks. Now, why am I doing it this way and why so little here? And that is because what we're doing is we're selling deep out of the money call on this poor man's covered call. That's about a 10-point spread from the current price to our strike price. And the reason why is, number one, we're not going to get that much in premiums, but I don't want anything to be called away. The probability of that being exercised by the end of the week at 130 is going to be slim. I believe the delta was like 30 or 31. All right. Basically what we're doing also is we're working ourselves out of the hole. All right. We had a tech wreck that happened about 2-3 weeks ago, and tech is slowly starting to come back. But since we were so heavy in tech, at the time of the tech wreck, I had Apple and I had ChargePoint. Combination, the loss of just those two, I'm talking about unrealized loss in those two, was about $3,600. So we're working our way out of the hole. Luckily, we can go ahead and generate some income by selling premiums on those two. All right, let's take a look at our goals. You know, I've got 3 goals. Number 1 goal is try to end the year at 24K plus. We started with a $12,000 balance. Our current balance is $11,501.41. Our record is 10-1. The indexes, how do we compare to the indexes? Currently, right now, the Dow Jones has given a return of 7% so far for the year. The S&P 500, 4%. And the NASDAQ, they climbed out of a hole, now they're at 3%. And we're sitting at, and I might as well put it right, use this. We're sitting at 4%. That's the hole that we're trying to climb out of. Now think about this. I want you guys to think about this. Those 2 stocks were down, Apple, ChargePoint, we're down a total of about $3,600. We're only $500 down from where we started. So with that, and the reason why is because we were able to sell options, to sell and collect those premiums on those options. So what happens when you sell options is this here. You're going to mitigate your losses. That's pretty much what we're doing. All right. Whenever Apple and ChargePoint start to climb back up and recover their losses there, this percentage is going to start to go up exponentially. But also with selling premiums, when the times are really good, you're looking at an increase or a multiple effect on your gains. So you mitigate your losses and you accelerate your gains when you're selling premiums, depending upon what's going on within the market and when those stocks. One of those 2 things are going to happen. So that's why I'm continuing to sell premiums on stocks that are down. That's the advantage. Now, if I wasn't selling premiums, I'll be down $3,600. It wouldn't be 11.5. I'll be down a lot more than that. So those are the advantages there. Now, with that said, we're going to see what happens at the end of week 12. And before I leave you, I've always got to tell you guys, remember these 3 things. Save, invest, apply what you know. Because knowledge is not power, it's the application of knowledge is power. Hey, I'll see you guys on week 13. Bye.
Come on now.
That's right. Go ahead and hit that like and subscribe buttons, followed by that notification button. That'll help out the channel. Thanks.